Hi everyone, Chad Shoop here, and thanks for tuning into my video today. The market's going haywire right now. We've seen a lot of volatility since the Federal Reserve meeting and since the announcement on tariffs. But this is a really exciting time for traders, and it's a really exciting time for one strategy that I like to implement during times of increased volatility. And it means that we create bigger gains. All else being equal, we're generating bigger returns during moments like this. So I'm really excited to jump into this today, and I'm going to talk about that strategy. But first, I'd like to hear your thoughts on all the volatility in the market, on tariffs, and on the interest rate cuts. Is this really a time that we need to be worried, and maybe it's the start of a longer downtrend, or is this a great buying opportunity for you? Do you see this bull market continuing higher from here? You can leave me a comment below, and I'll be sure to jump in with my thoughts on that. And if you enjoyed my video today, be sure to give it a thumbs up so that way I know you appreciate this content. And lastly, if you're excited about investing, if you're ready to jump in and start trying out these different strategies that we talk about and take advantage of some of these opportunities, there's a link below that you can join us and start doing these trades as well. So back to my topic today. When you looked at the Federal Reserve coming into this meeting, I didn't really see a reason for them to cut interest rates other than kind of giving into this market hype of cutting interest rates. And they ended up delivering for the market. It was a little bit less than what President Trump was looking for. He wanted a half a point cut. They only cut a quarter a point. So the market still wanted to see more talk, though, about cutting rates going even further, and they didn't give them that. Instead, Fed Chairman Jerome Powell really cut back on the talk about any further interest rate cuts and just talked about this as being a mid-cycle adjustment and this one kind of interest rate cut, and then they're going to take a break and see how the market does from there. So that really disappointed the market, and we started to see it sell off. And then President Trump came announcing more tariffs on China, and we saw the market sell off even farther. And then we've seen more volatility since then. So during times of volatility, I measure volatility with the CBOE S&P 500 Volatility Index, also known as the VIX. And when I look at the VIX, there's a key level on there that tells me that the markets are fearful right now. And it's not necessarily, this is not, overly bearish in the readings. We want to see that get above about 30, but once it hits 20, that's my key level that lets you know that the market is fearful right now and that investors are ready to be more protective in their actions. And what that means is that in stocks, we're going to see increased volatility, sharper swings as investors are looking to take shorter term trades. But in the options market, and that's where our opportunities are today, when you go to the options market, higher volatility means that these option premiums cost more because they're expecting bigger moves. And you really see that play out on put options, which are what investors buy to hedge their stock positions to the downside. So they're buying these put options to limit their downside risk, but they're willing to pay up for those. So what I like to do is I like to flip the script on them, and I like to come in and on great stocks, great companies that have been beaten down, I like to come in at a lower price, and instead of buying those put options, I'll sell those put options to those people looking to buy put options at a higher price than they were, let's say, just a month ago. So we can come in, we can sell these put options, and we're doing that to generate income. And when we come in during times like this, we've seen an extreme success. The last time that the VIX held above 20 was last year, kind of last October through January. The VIX was in a sustained level above 20 of heightened volatility, more fear in the market. And during that time, we put on about 14 trades of selling put options to generate income. And every single one of those were closed for a profit before now. So we were able to come in during these times, generate solid returns from the increased volatility. And I'm excited that right now we got another chance to do that with this VIX above 20 or right around 20. It's a great opportunity for us to come in and begin selling options again. This is the ideal time to come in and sell options. Almost any company you want, there will be an option on there that's worth selling. When you go back a month ago and the VIX is at low levels, it's extremely difficult to find great options to sell puts on for these stocks because the premiums are just not there. There's no volatility, so investors are not really paying up for them. But right now, it's an exciting time to come in. Almost any stock, you name it, that you want to sell a put option on, that you want exposure to, you can come in, sell put options, and generate income. And if you want to learn more about that, I have a link below to tell you all about how we can sell put options to generate steady income, because if you haven't heard about it, I know it may sound a little overwhelming, but trust me, selling put options is no harder than buying a stock. So if you can buy stock with your brokerage account, you can also sell put options. So be sure to check that video out to learn more. And I also have a link below to my full article on this strategy and on this topic today. So before I sign off, just make sure you subscribe to my channel so that way you don't miss out on any of my weekly videos. And you can also click the bell to get a notification whenever I post a new video. So until next time, I'm Chad Shoop.